Welcome to TradeTheNBI.com. This is John's reports for the 13th. Uh, Way on my holiday, but there was no surprise. We'd already seen the fake out dip down towards the 76, and that we could see that there was going to be short-term buyers popping back up to elevate things, and just enough to scare enough people to get them out where it left somewhat of a discount and a significant discount when you think about it, from the 76 all the way back up to 100, and now breaking out into the new 100 range. So all in all, pretty expected with what we saw from the extreme histogram, where we were dipping below the red line on the dip, and that meant that we were going to get support from within there. And I don't think any of it was even remotely surprising or questionable. It was pretty clear from the beginning. And now we're seeing more of a uniformity between the NASDAQ and the S&P, both breaking out similarly from their 100% range and developing a bit more consistency. Now, if the shakeout is able to take out, if the shakeout is able to take out the previous highs here, that will make it completely congruent to continuation. So keep that one in the back of the mind. TLT rising up a little bit as we got down to where relative rates should be. Again, now people speculating again that the Fed can't do what the Fed is going to do, which is continue to tighten if oil does this. And this is the nightmare breakout of oil, and it's a reflection of the pressure that Russia continues to put on with the whole BRIC setup and their adjustments on trade and how much oil is available. And if things for the economies aren't turning south and oil goes up, is problematic, because it's going to put significant upside pressure, which certainly will cause the Fed to continue to fight inflation. The fun one out of it becomes the euro, because in a ridiculous move, as though somehow the euro stabilizing because they're not going to support any more hyper involvement from Ukraine, that somehow is a lift for the EU. It's the things that they make up for this stuff. It's hilarious. From a gold standpoint, easing back up as oil, so it's moving along with oil from that standpoint. You're not seeing much from a crypto stance, because it already had its, at least the Bitcoin had its breakout. ETH would have to catch up to that one a little bit more to get close, and it's not really performing much. And there's no reason to be there if the market is performing like this. And so we can see the clear buy signals came in from that 50% range and continued to elevate right up through. So all in all, that was pretty clean stuff. It's a little weird from the intraday charts when you're looking at it from a minute one, but you can just move to the pre-market open there and boom, catapult, fade back into what the open was. But that was just a cue to get some more liquidity, clear out some of the short-term stops that people had in there before bringing it right back up to the peak levels. And then we can see where we're at here in the post-market. Has just been nothing but buy captures. Positive extremes were all the way from the original breakout. The earliest ones had already been filled. It's just that initial breakout that hasn't yet been filled. That often happens within a nice little upcycle. And even in this most recent run up, none to speak of. Wasn't until the very end, and that already filled back in place. So it's all clean, it's all congruent. Back from my vacation to continue to capture more of this volatility, and I think it's going to be a lot more difficult as we get in there, because again, people are terrified at the valuation number and whether or not things are sustainable, but they also don't take into account the dollar devaluation when they're taking a look at some of this stuff too. So always keep that in mind. As always, though, I will update you on the Skype chat. Anything relevant, trade well. We'll talk in there.